So in the last video, we finally saw a currency pair for what it really is. Not one thing you buy, but two currencies going head to head. Now here's the problem that hits every beginner the moment they open their trading platform. You go looking for a pair, and you're staring at a giant list. Dozens of them, sometimes hundreds. Euro USD is in there, sure, but so are names you've never heard of, with 3 letters you can barely pronounce. And nobody tells you which ones are safe to learn on, and which ones will quietly wreck your account. So by the end of this video, you'll have a simple map of the whole market. You'll know the 3 families that every currency pair falls into, why some are calm and cheap to trade, while others are wild and expensive, and exactly which handful a beginner should focus on first. No more scrolling that list feeling lost. You'll know precisely where to look, and just as importantly, where not to. So, if this kind of content helps you, take a second to like the video, subscribe, and turn on notifications so the next lessons reach you the moment they go live. And feel free to share in the comments which topics you would like us to explore in future videos. And if you want to support the channel on a deeper level, consider becoming a member to unlock exclusive content and help keep these lessons coming. You'll also find links to our trusted partners in the description below. Using them costs you nothing, and it directly helps the channel keep producing free educational content like this. So let's start with the good news, because it takes a lot of the fear out of that long list. Those pairs aren't thrown together at random. They actually sort themselves into 3 clean groups, and the thing that separates them is liquidity. Basically, how many people are trading them and how much money is flowing through. Learn this map once, and that scary list turns into 3 tidy shelves. The first shelf, and by far the most important one for you, is the majors. These are the 7 most heavily traded currency pairs in the entire world, and they all share one thing in common. Every single one of them has the US dollar on one side. Let me name them, because you'll be seeing these for the rest of your trading life. Euro USD, the euro against the dollar, the biggest and most traded of them all. USD JPY, the dollar against the Japanese yen. GBP USD, the British pound against the dollar, the one traders nickname Cable. USD CHF, the dollar against the Swiss franc. USD CAD, the dollar against the Canadian dollar, known as the loonie. AUD USD, the Australian dollar against the dollar, called the Aussie. And NZD USD, the New Zealand dollar against the dollar, the Kiwi. Now, you might be asking, why does the dollar show up in every single one of them? And that's not a coincidence. Forex is the biggest market on the planet, trading around $9.6 trillion every single day. And the US dollar sits on one side of roughly 89% of all of it. The dollar is the center of gravity for the whole market, so the pairs built around it are the busiest of all. And here's a detail that reframes that whole intimidating list for you. There are only 7 majors. That's it. 7. The reason your platform looks so crowded is that the crosses and the exotics number in the dozens, sometimes the hundreds. So the moment you realize the shelf that actually matters holds just 7 pairs, that endless menu suddenly feels a whole lot smaller. And busiest is exactly what you want as a beginner, because all that trading activity does something powerful for you. It makes these pairs deeply liquid. Liquid just means there are always plenty of buyers and sellers ready to trade. And when a market is that liquid, it tends to have the tightest spreads, the smoothest price movement, and far fewer of those sudden, ugly jumps that catch people off guard. That tight spread matters more than a beginner realizes, because the spread is basically your cost of entry on every trade, and on the majors, it's about as low as it gets. We're going to dig into exactly why that matters in the very next video, so for now, just hold on to this one idea. The majors are the cheapest and cleanest pairs to trade, full stop. The second shelf is what we call the crosses, or sometimes the minors. These are pairs that are still built from major currencies, the euro, the pound, the yen, and so on, but with one currency missing, the US dollar. Take the dollar out of the mix, and what you're left with is a cross. You'll run into names like Euro GBP, the euro against the pound, Euro JPY, the euro against the yen, and GBP JPY, the pound against the yen. In fact, these pairs were historically put together by routing 2 majors through the dollar behind the scenes. Euro JPY, for example, is really the euro dollar and the dollar yen stitched into one price. Crosses are perfectly tradable, and plenty of experienced traders love them, but be honest with yourself about what they are. With the dollar's deep liquidity taken out, they usually carry wider spreads, and they can move a lot harder. GBP JPY is famous for exactly this. It can swing so violently that traders have nicknamed it the Beast. It's a great pair once you know what you're doing, and a rough place to learn when you don't. The third shelf is the exotics, and this is the one I want you to be most careful with. An exotic pairs one major currency, usually the dollar or the euro, with the currency of a smaller or emerging economy. Think USD/TRY, the dollar against the Turkish lira, USD/ZAR, the dollar against the South African rand, or USD/MXN, the dollar against the Mexican peso. On the surface, exotics can look tempting because they sometimes make these huge, dramatic moves. But here's what's really going on under the hood. Very little liquidity, very wide spreads, and prices that can gap violently on a single piece of political or economic news. They're expensive to trade and quick to punish a mistake. For a beginner, that's just about the worst combination you can pick. So picture those three families as three shelves stacked by cost and risk. The majors are the ground floor, solid, liquid, and forgiving. The crosses are one floor up, still fine to work with, but faster and a little pricier. And the exotics are the top floor, with no railing, thrilling to look at and dangerous to stand on. You want to master the ground floor long before you ever think about climbing. So now we can answer the question this video started with. Out of that whole intimidating list, which pairs should a beginner actually focus on? The answer is refreshingly simple. The 7 majors. And honestly, when you're just starting out, you don't even need all 7. Picking 1 or 2, with Euro USD being the classic first choice, is more than enough to learn on. And the reason is everything we just walked through. The majors give you the tightest spreads, so trading costs you less. They give you the deepest liquidity, so your orders fill smoothly. And they give you the cleanest, most stable price movement, so the market signal is easier to read. When you're learning to read price, you want the clearest chart in the room, not the noisiest one. And there's a quiet bonus to starting with Euro USD in particular. It's the most watched, most analyzed pair on Earth, which means almost every tutorial, every example, and every market update you'll ever come across is built around it. When you learn on Euro USD, you're never studying alone. The entire trading world is looking at the very same chart you are. Now, let me be straight with you, the way we always try to be here. Focusing on the majors does not mean the majors are easy money. It just means the playing field is fair while you learn. Knowing which pairs to look at is a completely different skill from knowing when to actually enter one, where your entry goes, where your stop sits, how to read the setup. That side of things lives in our technical analysis course, and the deeper institutional side of liquidity belongs to our smart money and ICT material. Here, we're drawing the map of the market itself. And one last seed to plant for what's coming. Even within those 7 majors, each pair has its own personality. Euro USD tends to be calm and steady. Cable, GBP/USD, moves faster and needs more room to breathe. And the commodity dollars, the Aussie, the Loonie, and the Kiwi, each dance to their own tune. We're going to give every one of them its own spotlight in the next chapter of this series. So let's lock in the answer. The pairs you'll see all fall into 3 families: the majors, the crosses, and the exotics. And what separates them is liquidity. The majors all contain the dollar and are the most liquid, the cheapest, and the cleanest to trade. The crosses drop the dollar and get a bit wilder, and the exotics are thin, expensive, and unforgiving. If you're a beginner, you focus on the 7 majors, and you do just fine starting with only 1. Now, I've thrown around the words tight spread and liquidity a few times in this video, almost like it's obvious why they're a good thing, but I never actually showed you why they hit your bottom line. So in the next video, we're going to answer exactly that. Why do spreads and liquidity really matter to me? Because that little gap between the buy price and the sell price is quietly charging you on every single trade you take, and once you see it clearly, you'll never pick a pair the same way again. I'll see you in the next one, trader. So, trader, if this video brought you more clarity, like it, subscribe, and turn on notifications so the next lessons reach you. And tell me in the comments what you want me to cover next. And if you want to go deeper, You can become a member of the ComLucro trader community right here on YouTube. It unlocks exclusive content, early access, and extra tools for your development, while directly supporting the channel. You'll also find our trusted partners linked in the description. Using those links costs you nothing and helps us keep producing this kind of educational content. And remember, the mission of the ComLucro channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you'll find complete courses built as a true trading masterclass. Liquidity, market structure, higher time frame analysis, and supply and demand. Always focused on reading price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency. Because trading isn't just about charts, it's about mindset, discipline, and execution over time. Our main courses include smart money concepts, ICT, technical analysis, trading psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you understand how markets really behave. Thanks for watching, and I'll see you in the next video.